Today's interest rate decision in South Africa, the rand jumped nearly 2%, I said that earlier, against the dollar, as the country's central bank delivered a surprising 50 basis points hike on its repo rate to 7.75%, which takes South Africa's prime lending to a new high of 11.25. Let's take excerpts from the Sejake Giangodis Reserve Bank governor on how his two members decided on interest rate direction.
The rise in South Africa's headline inflation rate has been shaped primarily by fuel, electricity, and food price inflation. Fuel price inflation last year averaged 34.4% and is expected to be negative 0.6% in 2023. The electricity price forecast is unchanged at 12.9% in 2023, 14.5% in 2024, and 10.9% in 2025. Despite a fall in global food prices in dollar terms, local food price inflation is revised up, in part due to the lagged impact of the weaker exchange rate. Food price inflation is now expected to be 9.9% in 2023 and 4.5% in 2024. Our forecast for core inflation is largely unchanged at 5.1% in 2023, 4.8% in 2024, and 4.5% in 2025. Services price inflation in 2023 is forecast to be 4.9%, lower than previously expected. Core goods inflation, however, is forecast higher for this year at 5.9%. The forecast for average salary growth and unit labor costs is somewhat lower in 2023 and higher in 2024 and 2025. With food and core goods higher in the near term, headline inflation for 2023 is revised significantly higher to 6.6%. Despite this, food and fuel inflation are expected to ease, resulting in a headline forecast of 4.9% in 2024 and 4.5% in 2025. Risks to the inflation outlook, however, are assessed to the upside. Despite some easing of producer price and food inflation, global price levels remain elevated. Russia's war in the Ukraine and China's economic rebound are expected to keep the global oil market relatively tight. Electricity prices and other administered prices continue to present clear short and medium-term risks. Domestic food price inflation surprised higher again in February, and risks of drier weather conditions have increased. Load shedding may additionally have broader price effects on the cost of doing business and the cost of living. Given sticky petrol and higher food price inflation, considerable risk still attaches to the forecast for average salaries. Interest rate levels in major economies are higher than projected in January, averaging 3.8% in 2023, 3.4% in 2024, and unchanged at 2.4% in 2025. Tighter global financial conditions raise the risk profiles of economies needing foreign capital, leading generally to weaker currencies. South Africa's risk premium is sharply higher and will likely remain elevated over the forecast period. Given load shedding, upside inflation risks, and larger external financing needs, further currency weakness appears likely. Inflation expectations increased strongly over the past year. Average expectations of future inflation surveyed in the first quarter of this year increased further to 6.3% for 2023 and 5.8% for 2024. Expectations for inflation in 2023, based on market surveys, are 5.8%. Long-term inflation expectations derived from the 5-year break-even rates in the bond market sit at 5.27%. Headline inflation breached the upper end of the target range in the second quarter of 2022 and is forecast to remain above it until the third quarter of this year. Headline inflation is only expected to sustainably revert to the midpoint of the target range by the fourth quarter of 2024. The forecast takes into account the policy rate trajectory indicated by the bank's quarterly projection model. As usual, the repo rate projection from the quarterly projection model remains a broad policy guide, changing from meeting to meeting in response to new data and risks. Against this backdrop, the Monetary Policy Committee decided to increase the repurchase rate by 50 basis points to 7.75% per year, with effect from the 31st of March 2023. 3 members of the committee preferred the announced increase, whilst 2 members preferred a 25 basis points increase.